So good to have you join us today. Hello and welcome to the program. I'm Lee-Ji-yoon in Seoul. Coming up on today's Business Daily. Korea's current account surplus in March fell to the lowest level since November of 2013, largely due to a reduced goods surplus. The Korean economy appears to be on a recovery track as its exports continue to rise, but the country's unemployment is also at troublesome heights. We find out why with an expert. Now, we first start off with the markets. The Korean stock market made history today, hitting a record high. For more on this, we have our Lee Ju-young on the phone. So, Ju-young, how are things looking at the closing bell?
June, as you said, the Kospi hit new highs today, reaching 2,241.24, closing almost 1% higher from the previous session. The tech-heavy Kosdaq also closed up nearly 1.4% at 635.11. The Korean won weakened against the greenback, ending at 1,132.71. The record closing comes after the benchmark index hit an intraday high in the morning session, where it spiked to 2,234.07, the highest in trading since 2011. The Kospi so far this year has been one of the best performing Asian indices, behind India, Singapore, and Hong Kong, gaining more than 10% year to date. This has been Lee Ju-young for Business Daily.
Korea's current account surplus contracted in March due to a widened deficit in its services balance, and this comes on the back of a sharp decline in Chinese tourists, as well as a rise on the number of Koreans traveling overseas. Our Kim Min-ji reports.
Korea's current account surplus narrowed in March. The Bank of Korea says the country logged a surplus of over $5.9 billion, extending the surplus streak for 61 straight months. However, the March figure is down from over $10.5 billion posted in the same month last year. The central bank attributed the contraction to an expansion in Korea's services balance deficit, which came to nearly $3.3 billion in March, 3 times larger than the figure a year earlier. This was due mainly to a decline in Chinese tourists, as well as a rise in Koreans taking overseas trips. The number of Chinese tourists tumbled over 40% on year in March, after Beijing banned the sale of tour packages to Korea in an apparent retaliation against Seoul's deployment of a U.S. missile defense system. The number of Koreans who traveled abroad jumped nearly 24% to over 1.9 million. Korea's goods account surplus came to $9.8 billion, down from $12.8 billion last year, as imports rose at a faster pace than exports. The latest data comes after the U.S. published its foreign exchange report in April, which did not list Korea as a currency manipulator. Korea met only 2 out of 3 criteria required to be listed. The country posted $28 billion in goods surplus with the U.S. last year, and its current account surplus accounted for 7% of its GDP.
I believe trade issues with the U.S. can be solved through dialogue and cooperation with the Trump administration. We have begun importing liquefied natural gas as well as other petroleum goods from the U.S. to reduce the trade surplus. Already in the first quarter, Korea has significantly increased its imports from the U.S. It's always been a trade balance issue with the U.S.
The Korean government is vowed to keep reducing its surplus with the U.S. to ensure it avoids being labeled a currency manipulator in the next Treasury report due in October. Kim Min-ji, Business Daily.
Korea's foreign exchange reserves reached a 7-month high in the month of April. The Bank of Korea says the country's foreign reserves hit $376.5 billion as of the end of April, up $1.27 billion from the month before. Now, this marks the second consecutive month that reserves have climbed. The increase is attributed to a weaker U.S. dollar against other currencies like the euro and sterling pound, with the dollar index sliding 1.3%. As of March, Korea was the 8th largest holder of foreign currency reserves in the world. The U.S. Federal Reserve has kept its benchmark interest rate steady, but says the recent slowdown in economic growth was likely temporary, leaving the door open to further rate hikes later in the year. Our Park Se-young has more.
The Federal Reserve has left its key policy rate unchanged at its current rate of 0.75% to 1%. The decision came on Wednesday after the Fed's two-day monetary policy meeting in Washington. It was a widely expected move from the central bank, which hiked the lending rate by 25 basis points back in March. While acknowledging that the pace of growth in the U.S. economy was slower than expected during the first quarter, Fed officials remain bullish on the country's economic prospects. The central bank said it expects the job market and economic activity to pick up as the year moves along, leaving it on track to gradually raise interest rates. Officials were further encouraged by a somewhat brighter outlook on the global economy and inflation running close to its target goal of 2%. Although the Fed made no explicit remarks as to the timing of the next rate hike, market watchers are betting on a move in June and one further hike later this year. The Federal Reserve remains in a monetary tightening cycle and plans to gradually raise interest rates from the near-zero levels it maintained for nearly 7 years until late 2015. Following the Fed's announcement, the Dow Jones Industrial Average raised earlier losses to eke out a gain of 8 points at the closing bell. The central bank's next policy meeting will start on June 13th in Washington. Its rate decision will come alongside updated quarterly economic projections and a press conference by Fed Chair Janet Yellen. Park Se-young, Business Daily.
Beijing's economic retaliation against Seoul over its decision to deploy an American anti-missile system is expected to take a multi-billion-dollar bite out of the Korean economy. But a local think tank says while Korea is suffering the most, China is also hurting itself with its own measures. Here's our Oh Jung-hee with more.
China could be shooting itself in the foot with its latest actions against South Korea. A local think tank says South Korea and China will suffer economically from Beijing's retaliatory moves against Seoul's deployment of the U.S. missile defense system THAAD. According to a report by the Hyundai Research Institute on Wednesday, Korea's losses due to China's economic retaliations are expected to reach roughly $7.5 billion. That's around 0.5% of South Korea's GDP. China is not as badly affected, but still sees a minimal impact of $970 million, around 0.01% of its GDP. South Korea's tourism sector is the hardest hit by China's anti-THAAD measures. Chinese authorities slapped a ban on local sales of tour packages to South Korea in mid-March. Assuming Korea will see a 40% decrease in the number of Chinese tourists from April to December, the losses are expected to top $6.2 billion. Partly due to Korean tourists choosing to vacation elsewhere because of the anti-Korea sentiment in China, Beijing will lose more than $900 million. South Korea's exports to China may also drop by $1.2 billion, with shipments of cosmetics and food products suffering the most due to non-tariff measures like sanitation inspections. China's restrictions on Korean dramas and contents are estimated to cause losses for Korea amounting to some $7.7 million. Tightened tax probes and curtailed investment in Korean companies in China is actually having the reverse effect, taking a toll on the Chinese side, causing over $40 million in losses, but very minimal financial damage to Korea. THAAD, the U.S. anti-missile system at the heart of the dispute, is now operational in South Korea. Of the 4 launchers brought into the country, 2 of them are running, protecting the South from North Korea's missile threats. With tensions expected to escalate between South Korea and China, the Research Institute says Seoul needs to build a strong long-term economic and diplomatic partnership with Beijing, but lessen its dependence on Chinese investment. Oh Jung-hee, Business Daily.
The recovery in the Korean economy seems to be gaining momentum, but the strong upswing in exports has yet to boost the job market, leaving unemployment hanging over the local economy. Take a look.
Korea's exports continued to rise in April, reaching the highest level since October 2014. This news comes on the back of increased overseas sales of semiconductors and flat panel displays. Exports have been on an upward trend since November of last year, driven by an upturn in oil prices and the recovering global economy. But despite the positive changes seen on the trade front, high unemployment continues to haunt the Korean economy, with the expansion of exports showing a disconnect with job creation. The jobless rate hit 5% in February, the highest in 7 years, as the number of unemployed reached 1.17 million in the January through March period. So why isn't the recovery seen in exports translating into job creation?
And to tell us more about this, we have Professor Kim Se-wan from Ewha Women's University joining us in the studio today. Great to have you here.
Pleasure to be here.
So exports have been rising and the economy appears to be getting better, at least according to some economic data. But we're not actually seeing things getting any better for the employment front. Why so?
Well, from the early stage of economic development in 1960s, the export has been given the top priority in economic policies because export means employment and income of the nation. But the strong link between employment and the export has been weakened due to the structural changes in exporting industries. So as of today's Korean economic situation, it takes about half a year to 2 years for increased export to give impacts on employment and income of the nation.
Now, the recent rally in exports was led by key export items like semiconductors, petrochemicals, and cars. Now, how do these areas relate to employment growth?
Well, they used to be simply the largest employers in the past, but not anymore today. So these industries' production lines are highly automated. So for example, Samsung Electronics chip division had one of the largest investment in the last year, up to 13 trillion won, or 13 billion US dollars. But they only added 600 workers.
Now, going further with that, I mean, how does automation come into play when it comes to jobs here in Korea then?
Well, believe it or not, Korea is one of the most advanced country in automation of production line. So, for example, the ratio between the robots to workers is simply the highest in the world, by 500 robots per 10,000 workers. So it became more structurally difficult for increasing employment of the nation by more investment and more export in these industries.
And another problem could be a growing preference among Korean companies for overseas investment, right?
Right. From 1990s, actually, there has been a boom to move production facilities to foreign countries like China and Vietnam. But we can't blame these companies because they wanted to lower production costs by using lower labor cost. So as of today, Chinese average workers' salary is only 60% of Koreans. And also, according to Chamber of Commerce recent report, the Korean companies created jobs in foreign countries from 0.5 million jobs to 1.6 million in the last 10 years.
Wow. Now, what about the gradual recovery we've been seeing in the manufacturing sector? I mean, how can we expect this to help Korea in creating more jobs?
Well, actually, exporting industries are not anymore the largest employers in Korea. Instead, we have to have new opportunities in service industry like medical, sightseeing, and education and telecommunication related industries.
Now, then what can be done to make sure that the recovery in the local economy gets translated into more jobs?
Well, as we talked about, the possibilities are in service industry and small and medium-sized companies. Service industry covers 70% of the total employment, and small and medium-sized companies covers 90% of the total employment. So there should be something extraordinarily deregulations in service industry for increasing employment. And in addition, there should be something very strong reshoring policies for foreign jobs coming back to Korea.
Well, this is especially worrying as the youth unemployment rate is hitting record highs as well, right?
Exactly. The problem related to young people's employment is that the big companies and service industries, particularly in banks and financial companies, do not provide a large number of opportunities for the new workers.
All right. Let's hope to see better things happen on that front. Thank you so much for coming in today.
Thank you very much.
Are presidential candidates making promises that Korea can't afford? As we edge closer to Election Day, our Elliot Kim takes a look at the financial soundness of these ambitious pledges.
With the election approaching this Tuesday, major research institutes are concerned about the impact campaign promises by leading candidates could have on the country's financial situation. One of the greatest worries stems from the challenge of maintaining fiscal soundness with a rapidly aging population and impending welfare needs.
If I'm elected, I'll immediately draw up an extra budget worth 10 trillion won to create jobs.
I will raise the basic pension for seniors in the lower 50% to 300,000 won.
Many different promises have been made, some in jobs, welfare, and defense. But the common theme is the immense financial cost of these programs. Looking at 10 of the major pledges submitted to the National Election Commission, there's a surprising lack of specific funding plans for them. The issuing of financing will come into play once the new president takes charge, but many factors need to be weighed, especially if the plans rely on raising taxes and cutting expenditure elsewhere.
We have no choice but to discuss this to reach a national consensus. Welfare without taxes doesn't exist, but no government raising this issue has been popular.
Another way to fund these projects would be through public debt. The Korean government's fiscal soundness is rated among the highest in the world, which should allow some flexibility in investing in jobs and welfare. The problem is that welfare needs for the rapidly aging population could increase too quickly.
If we have a shrinking workforce and can't improve the GDP but increase welfare expenditures, the financial health will deteriorate.
Future estimates expect the national debt to surpass $1.2 trillion for retirement pensions and insurance premiums, a burden which will be passed on to the future generations. This is why maintaining fiscal soundness while increasing job creation and public welfare will be one of the major challenges for the next government. Elliot Kim, Business Daily.
Now, tomorrow is Children's Day here in Korea, and I'm sure a lot of parents are out getting last-minute gifts for their children. Spending in the recent years has been slow in general, but the kids industry has remained a bright spot in the economy. Here's more on why.
This is a major shopping complex in Seoul. Despite decreasing sales these days due to poor spending, businesses targeting children have been seeing a continual rise in sales. Gone are the days when marketing centered only on adults. Now many places offer more fun for both parents and kids, which is why large-scale kids parks are becoming more popular.
Kids can play and have fun here while parents can do some shopping, so I come here often.
About 25% of our shopping mall is billed as a kids park. Our main customers are parents in their 30s and 40s with children who make up about 67% of our customer base. A lot of people who live around here come because there's a kids park and they can buy both children's goods and everyday products in one place.
In this stagnant economy, consumers are still willing to spend more on kids' products. The market has seen rapid growth in recent years, reaching $35 billion, and it's still on an upward trend. In 2016, Korea saw the fewest newborns, with only 410,000 being born. This puts the average birth rate at around 1.17, among the lowest in the OECD. So why is the kids industry thriving? The low birth rate has in fact led to a newly coined term 8 pocket, referring to one child having as many as 8 people in the family, including their parents, grandparents, uncles and aunts willing to splurge on them.
A lot of families only have 1 or 2 kids these days, so even if they're a little expensive, I tend to get things that are nicer.
The change in location of the kids section in department stores clearly reflects this trend. Children's goods were typically located next to sports and golf stores, visited by middle-aged and older customers. But now they've moved to floors with lifestyle goods, targeting younger consumers in their 20s and 30s. This is because more people in this age bracket find themselves buying gifts for their nieces and nephews or friends' children. The rise in sales also has to do with growing purchases of premium goods. The less children parents have, the more willing they are to spend on pricey goods. From toy robots ranging from $10 to $20 to limited edition Lego kits ranging in the hundreds and children's cars, all are popular choices. The toy industry has continued to expand over the years, surpassing $1 billion.
Children's Day is coming up, so I came here to buy toys for my grandchild. It's expensive, but it's his favorite.
Our customers are usually parents in their 30s and 40s, and grandparents come here to buy gifts for their grandchildren. Even products that are over $100 sell well.
The popularity of kids' goods is also seen in outdoor clothing for children, which typically comes with a heftier price tag. These outdoor products are highly functional, giving parents more reason to pay extra for their children. The outdoor gear industry in Korea peaked in 2014 and has been on a downward trend since. But after launching an exclusive store for children last year, this company has raked in $15 million in sales. This year, it plans to expand its children's brand to double. The premium trend can also be seen in the food industry targeting children, as parents look to buy the best and freshest ingredients possible for their kids. One major organic food producer has even launched a brand specifically for children. These products do not come cheap, with many of them costing nearly twice as much. But sales have been rising, taking up about 13% of total revenue.
I come to this store often to look for healthy organic products that my children can eat.
Growth in the kids industry is seen as a promising opportunity to help lift growth. But some have also pointed out overheating in the high-end market could create a sense of polarization.
We are seeing a trend where goods sell well only if they're expensive. Some parents can afford this, but others can't. This kind of divide in spending could lead to polarization among children, and we might also see kids who are used to this special treatment struggling when it comes to being more independent.
The kids industry has seen explosive growth, defying the low birth rate and weak consumption. Hopes are it will find new ways to expand to cater to a wider consumer base and attain balanced growth.
And that wraps it up for today and this week. Thanks so much for watching. And we'll be back next week with more at the same time, same place for your Business Daily. Until then, goodbye.